Coming up, record profits from Bendigo and Adelaide Bank. China concerns hit the Australian share market, and we take a look at the economic impacts of FIFA's Women's World Cup here in Australia. It's your daily 10-minute business and finance news wrap for this Monday, the 14th of August, 2023. Later on Market Day, we'll speak with George Bourbouras from K2 Asset Management. But first to Bendigo and Adelaide Bank, which posted a record full-year cash profit of $577 million. I spoke with its CEO, Marnie Baker, earlier. Marnie, first of all, how would you describe the operating environment last financial year, and to what extent has it changed or remained the same now?
Yeah, I think I would define the characteristics, especially of the lending environment in the last 12 months, as being one of cashback offers, which, we haven't participated in. Given that we didn't think it was necessarily the right thing, by the business, and probably not, importantly, perhaps not the right thing by customers as well. But we're seeing, a bit of a move of that competition into the deposit side of the business now, as organisations are looking to pay down their term funding facilities over the next 12 months.
So on that balance between mortgages and deposits, how do you look at setting it and getting it right?
Yeah, well, we're fortunate that we have a number of channels available to us, both on the lending side and the deposit side. As you know, Ricardo, we remain around 70% retail deposit funded. It's really important to us as an organisation, and we have a unique ability in a sense of our community bank channel to be able to raise deposits through that channel, and more recently through our Up digital bank as well, which is, it just hit $1.5 billion in deposits. So we have a number of channels, available to us, and we're able to, I'll say pivot if need be amongst those channels, both on the deposit side and the lending side, to be able to balance that.
So by holding back on being super competitive mortgages, is that one way you've managed to increase your net interest margin, I guess? And how, and that happened at the same time as other banks like Suncorp and the Commonwealth Bank has seen it fall in the last half. And is this something that can be maintained?
Yeah, you're right. I mean, we decided, like I said, not to participate in some of that extreme sort of pricing by way of cashbacks, in the early part of the year, and as such, we didn't need to raise deposits to offset that lending, and that has had a positive contribution to our margin. We do expect going forward that we are going to see our funding costs increase slightly, as you would expect, as we are looking to repay the term funding facility, which was, going to see an increase there. But we manage that, and that's a part of how we do manage our assets and liabilities and our interest rate risk management in the bank.
I know that you guys are forecasting that we are pretty much at the peak or near the peak in interest rates. Given that we've seen 12 rate rises from the central bank this cycle, how are your borrowers coping with all those increases? And are you worried about that so-called mortgage cliff?
Yeah, so, we do think that we are near peak in relation to, cash rate increases. And we have been watching that, very closely. It has two sides to it, I suppose. It's tough for borrowers, but if you think about those, deposit holders who for, the last, decade or so really had, extraordinarily low interest rates on their deposits. So now depositors are getting a better return for their deposits with the bank. But we are watching, borrowers, and especially those that are going from fixed to variable. I'm not concerned necessarily within our own book. We we've been working with our borrowers for many months now in the lead up to them coming off fixed rates. And, they had built up, 84% of our borrowers had built up financial buffers. 41% of those had repayments in advance of 12 months and 31% in advance of 3 years. And so, had been preparing for coming off fixed rates. And, that's not to say that there isn't going to be, those that will need our assistance. And we are staying close with those borrowers, because we are in the business of actually keeping people in their homes, not kicking them out of their homes.
The landscape for fraud and cybercrime continues to evolve. How so? And what's the bank doing about it?
Yeah, look, it has been concerning. I think it took everyone by surprise, just the veracity of scams and frauds, in the last financial year. And so, it had everyone from telcos to social media platforms to banks, etc., thinking about what we needed to do to ensure that we were, protecting the funds and the information of customers better. And so we've made quite a number of investments, made some changes within our own organisation where, we're blocking high-risk cryptocurrency payments. We've put in place new rules and rules that create a little bit of friction in the system. Of course, we're a part of the FCX exchange with other financial institutions, sharing information so that we can, stop funds from going outside, of the system. And of course, we've doubled the number of people in our financial crimes team to assist customers so that we can be very dynamic and make sure that we are responding very dynamically to, customers who do find themselves in this situation.
Two final quick questions. The banking division of Suncorp, is it a viable business or acquisition for Bendigo?
Oh, look, the parties to that transaction, have said that they're looking for a review of the outcome from the ACCC. So I think I probably need to let that process play out, and it's a bit premature to speak of anything else at this point in time, Ricardo.
And finally, what's your company's position on the Indigenous voice to Parliament? Why? And are you financially backing the campaign one way or the other?
Look, I think it's important that Indigenous Australians have, a voice in relation to, the policies and practices that actually, do come out from government. No, we are not involved in the financial backing of any campaigns either way.
Marnie Baker there, the CEO of the Bendigo and Adelaide Bank.
Now, Market Day on the SBS On The Money podcast.
The Australian share market didn't start the working week on a good note because it fell. The S&P ASX 200 down 0.9%, 7,277. I spoke with George Bourbouras. He is the head of research at K2 Asset Management.
Yeah, good afternoon. Very quickly with Bendigo and Adelaide Bank, the cash profit was quite good because partly this is an overgeneralisation. They didn't participate in the mortgage incentives and aggressive competition in the first 3-4 months of this year from the major 4 banks in Macquarie. So that led to their margins being protected somewhat as they weren't chasing the new business as the other banks were. Having said that, the other banks then stopped the discounting again in that May, June, July period. But Bendigo Bank were the beneficiaries of that, so they're getting more in their deposits. They protect their margins. It's just the outlook of the economy in Australia. It's a bit uneven out there, the landscape, and the good news was pretty much priced in, and it's just going to weigh on it a little bit. However, if they get the Suncorp deal, which is a bit of a left field, that can be quite accretive after some cost synergies there in the years ahead. But that's a big if going forward.
Are there any similar themes about the consumer with JB Hi-Fi's $480 million full-year profit, which is down nearly 4%?
Yeah, look, the JB Hi-Fi deal, high level, they grew sales in the fiscal 23 year, and they did a remarkable job. They've been a remarkable job. They've been a good discretionary bellwether when the economy is doing quite well. And they're clearly, they're so well drilled, they're able to deliver, they maintain their margins somewhat because it's a choice to go to for the discounts. So a combination of discretionary retail, JB Hi-Fi do stand out versus their peers in the industry, very much versus Harvey Norman, for example, in certain segments. And it's actually a great result for them and shows that operating platform for the circa 210, 216 stores in Australia are really the go-to place for households that are under cost of living pressure. So they've been able to migrate from a luxury item and now to a discount item. So the best of both worlds, but a very good set of numbers, to be fair, in an area that it's very challenged for discretionary retail.
They're just two of a number of companies reporting today. Any others catch your eye?
Just broadly, what's catching our eye is that margins are very hard to protect right across the board. So for the major banks, it's going to be very difficult for them to basically put steps in to prevent the net interest margin pressure they're going to have going forward. And when you look at earnings, because this is a very, very busy week, just about a third of companies are going to report by market cap. It looks like the whole market's looking about, for the 6-month period, it's going to be broadly a flat to a small single-digit growth of earnings. It just shows you that there is some resilience out there versus where we thought we were going to be 6 months ago, but there are some challenges to get through. And that is why, again, an overgeneralisation, the RBA will be sitting tight because it's got enough rate hikes in the system to see how they play out, as there's some challenges and unevenness in the economy. But nevertheless, if you ask for these sort of numbers or earnings, say 6 months ago, you'd have taken them any day of the week.
The oil price is down, but it follows 7 weeks of gains. That's the longest rally since mid-2022. I think the Australian Institute of Petroleum also said that the national average petrol price last week reached a 9-month high. What's driving oil prices at the moment?
Yeah, it's an interesting one. So very quickly, globally, people saw that they expected some demand to pick up globally in the Western world and the emerging world. However, overgeneralisation again, sorry to do this, but with China being weaker than expected, broadly demand coming off a little bit, so that rally doesn't have that stimulus. Having said that, if demand drops off any further, one would think that one of the biggest OPEC suppliers, the Saudis, will cut production to maintain that price. They're really looking to get it towards that $90 a barrel, and if it fell under 80, you'd think there'd be some price cuts in there by the Saudis from OPEC going forward, just to protect their margins there. There is some complications out there. There's obviously states like Russia and Venezuela and Iran that are getting supply out there, but you can't be trading with those. There's some limits there, but in broad terms, it had that good run up, and now you've got the LNG issue on the other side of it. But demand is waning on the soft economic data just over the past week relative to where we were a couple of months ago.
You mentioned briefly there China. How much of a concern is that right now? We've seen the iron ore price slump today. The Australian dollar is at a near 9-month low. There's more concerns about China's property sector coming out. What's your take on the way China's managing its way out of those extended pandemic lockdowns and the implications for Australia? And has that all got something to do with the market falling today?
In part, yes. It's a very complex number 2 economy in the world. It really has trouble really getting that post-pandemic rally to have some sustainability while dealing with the world's largest property bubble ever seen. And they've been cutting interest rates over there for 2 years, where the Western world has been increasing interest rates and tightening. And that slowdown has got us a little bit by surprise. And that is why, as you say, the bulk commodity exporters are just weighing a little bit at the margin. But at the end of the day, it's probably easier to play China going forward with that extra stimulus coming and anticipated via suppliers of energy, key metals, and suppliers of bulk commodities going forward. But it is weighing on sentiment. The other thing very quickly is that a lot of investors haven't gone back to China. They've stayed in the Southeast Asian region. So the beneficiaries of not going to China to invest are economies like Vietnam, Thailand, Indonesia, Malaysia. Singapore also benefits. And the biggest winner is Japan within the region with what the issues going on with China. Very complicated, but they need to stimulate even more. They've been cutting rates again for 2 years and much more, and more innovative targeted stimulus to try and get sentiment to turn around somehow in mainland China, which is proving a little bit difficult.
Finally, so in this environment, where do you see the opportunities for investors at the moment?
The opportunities for investors are to anticipate the following, that the RBA will have a long period of pause predominantly, but the soft landing they're engineering, i.e. the non-recessionary scenario, implies that rates are higher for longer. So if you're a saver, that's good. If you're a borrower, this is probably the maximum pain, just sustain for another 12 to 18 months. You get rate cuts at the end into 2025. And having said all of that, it will be making a lot of headwinds out there. But key quality companies like JB Hi-Fi, discretionary retail, Macquarie Bank within financial services, global footprint, are just two examples. Woodside, which has got LNG exports right around the world, are the beneficiaries of that. Three different sectors, three ideas. So you've got to be a good stock picker to be able to find where there's less headwinds for those earnings relative to the others in that sector. So it's a bit of a balancing act for everyone out there.
Bourbouras there from K2 Asset Management. And a quick one on the FIFA Women's World Cup being held here in Australia. Airwallex says it'll generate economic benefit of $7.66 billion so far. Rhayna Bosch spoke with Angela Jackson. She is an economist at Impacts Economics for more.
So look, I think when we look overall at the World Cup and hosting the World Cup, it's been a huge benefit, obviously, to the economy. We've seen a lot of international visitors come. We've seen locals get out and about more and spend more. And figures released by Airwallex estimate that has added around $7.6 billion to our economy, which is just huge. Now, obviously, there are outlays associated with that and costs that government has picked up, but in this case relatively small because we haven't had to necessarily build stadiums and the sort of athletes villages and those other sort of aspects that often come with these big sporting events.
And how did Airwallex come to that figure?
So what Airwallex has done, as far as I can understand, is they have tracked internationally and locally expenditure related to the World Cup. So looking at ticket sales, looking at foreign exchanges, looking at the differences in retail and accommodation spend this year compared to previous years to disassociate the impacts and to quantify the impact of the World Cup on our economy.
Now, Angela, this discourse around a potential public holiday seems to be gaining some traction. A couple of government bodies seem to be backing it. What kind of an impact will that have on the economy?
So generally speaking, obviously a day off means that there isn't necessarily economic output happening on that day. And if we look at what sort of happens in terms of an average day, it's around $9 billion in terms of the overall economy. However, some of those costs are offset. So what we see is in some sectors, there's increases. So for example, in retail, in hospitality, we can see a real bump from having a public holiday. People aren't at work, so they're out spending, and that can be a real boom. And at the same time, for other businesses, they can often catch up on some of that lost output. So in terms of the cost to the economy, it's probably around $1.8 billion to $2 billion for a day off. The broader benefits, though, are in terms of well-being. We know that public holidays really do lift well-being across the economy, and productivity. Having that day off can mean that we all get back to work and we can work a little bit harder because we've had a bit more of a rest.
Angela Jackson there from Impact Economics. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.